Esteemed colleagues, today is Friday, and let's begin by thoroughly reviewing the market as we conclude this trading week. The first instrument we have is cryptocurrencies. Let's begin our analysis with Bitcoin. I always prefer to examine the daily time frame for better insights. Here, the first wave of impulse is forming, followed by a correction, then the third wave of impulse, and a fourth correction, after which the first subwave and second subwave are forming, breaking the channel for the third subwave. This movement currently represents the third subwave, but it is likely not completely finished yet. That is to say, the growth trend may very well continue. The third wave could potentially be the longest one according to wave analysis principles. Therefore, we might find ourselves moving within the established framework of the fifth wave, indicating a sustained upward trajectory. I shared this detailed setup with you around a month ago. I was preparing you for the purchase of Bitcoin within the fifth wave, and only after a full month has passed, the market, after forming the first and second subwaves, is considered, guys, to signal the beginning of the larger trend. For the market to begin rising in some global wave pattern, specifically wave 3 or 5, it always requires the formation of both the first and second subwaves beforehand. This is considered the beginning of the trend. Waves 3 and 4 are generally regarded as the midpoint of the overall trend. Wave 5 is considered the end of the trend. Therefore, the market will never move in alignment with your proposed scenarios as quickly as we would ideally prefer. Everything will shift and progress in accordance with the waves, starting from the initial phase of the trend, moving through the middle of the trend, and ultimately reaching the conclusion of the trend. And all of this will collectively represent 1, 2, 3, 4, and 5 distinct waves. In other words, any trend can be broken down into 5 waves. This is the grail that everyone is looking for, precisely in simplicity. The key to achieving success lies in our ability to accurately identify market waves and thoroughly understand which specific phase of the trend we are currently navigating. The beginning of the trend, the end of the trend, or the completion of the trend. Accordingly, based on these established rules, we can strategically attempt to trade on market corrections or confidently follow the overarching trend, and all movements are essentially predictable. That's why, guys, I congratulate everyone here with me on the Bitcoin purchases. We have achieved a profit of 3,600, so I believe it was even feasible to enter this particular trade without any cost. The risk I take per trade is set at 2%, while my profit target is 11%. On a trade of 1 to 5, so it's very profitable. The main thing is to enter at a good price, set a short stop, and achieve such a large profit. You can work out a position of 1 to 5. It is crucial to consistently adhere to effective risk management practices and to execute as many trades as feasible within a distance ratio of 1 to 3 or 1 to 5. Next, the 4-hour time frame. Here we are clearly forming an upward trend within the phases of 1, 2, 3, 4, and 5, which represent the first wave. Next, the ABC second wave is experiencing a deep market correction. The deep market correction has now reached the significant 236 level, which is widely considered quite profitable for traders. This is because the lower the price drops, the cheaper we can purchase assets, positioning ourselves well for the next upward price impulse. Such trading positions frequently involve a brief stop loss and the potential for a significantly large profit. Here we decided to buy at the breakout point of the established trading channel. My entry point into the market was on H4. I placed the stop below the double bottom and set the target here at the 2618 level. I plan for it to reach 345, and we can work through the entire 5-wave movement to the target of 2618. Additionally, on the daily time frame, this will represent the final 5th wave, which is expected to complete the upward movement for Bitcoin. Following this wave, the market will likely transition into a correction, leading to a potential decline in prices as traders take profits. I'm not entirely sure, but many people are suggesting that an altcoin season could potentially begin soon, where various coins might start to rise in value. Looking at crypto, everything seems to be pointing to growth. Many different coins are currently showing impressive growth, and it appears that this is only the beginning of a promising trend. Now could be the ideal season to earn and trade, as the market may not be as active later on, making opportunities less frequent. That's why Bitcoin, congratulations everyone, 3,600 profit. Let's continue holding our buys. Next instrument, Ripple. For those who are actively trading Ripple, the dynamics are essentially similar to those of Bitcoin. The market tends to move predominantly on the daily time frame. One strong impulse followed by 2 corrective phases, then a third impulse, a 4th correction, and finally we observe the formation of levels. First bounce, second bounce, and 3rd bounce. The current price level did not permit sellers to decrease their prices any further, and as a result, if there is a rebound at this point, the bulls may seize the opportunity and take the initiative, potentially causing the price to rise significantly. This will be our 5th significant wave. Whenever you trade levels, If you participated in this movement, you must place your stop behind the level, definitely behind the level, because in this example, I'll show you how this trade was working for me. We purchased Ripple at this location approximately at the beginning of September, and we strategically set the stop just behind the significant support level for added security. Then we reached the end of September, and shortly after, October began. Here it didn't quite reach the stop, and now we have already arrived here. In principle, we maintained this position through both the market's ups and downs, and now we have successfully increased by 1,000. If the fifth wave indeed starts this month in October, we could potentially earn a significant amount of profits. So guys, it's really important to practice patience because the market doesn't always move in alignment with our anticipated scenarios. There are easy trades and there are difficult trades. And accordingly, all of this will ultimately serve as a significant test of your psychology, how you will behave in various situations. Disciplined traders who carefully open positions, set appropriate stop losses, and take profits without making impulsive decisions will ultimately earn consistently. Those traders who prematurely close positions out of fear of incurring losses or missing potential profits won't be able to sustain their success in this market for long either. Today in the chat, a young man mentioned that he decided to close his Bitcoin trading position for personal reasons. So he held the purchase of Bitcoin and closed the position somewhere around here. The growth potential here is just enormous. If this is truly the fifth wave, then it certainly is, but it could have potentially brought at least an increase of 2 or 3 times. But since he is still quite inexperienced in trading, beginners typically take profits quickly. Upon seeing money, they grab it immediately, believing that's all there is to it. However, if you choose to wait for 2 to 3 weeks, you could potentially have taken 2 to 3 times more than you initially planned. If you close your profits early, you won't have anything to cover your losing trades, because trading is a series of profitable and losing trades, and we will effectively cover our losses with the gains from our profitable trades. But how will you cover them if you close positions here? You need to close this position here so that it adequately covers 300, for example, and additionally you will earn something there. That's how it works. So we allow our profits to increase, but we must take action to cut our losses effectively. For some reason, many people do the opposite. So I maintain my investment in Ripple, avoiding taking profits, allowing my gains to continue growing. The total risk on this particular trade for me amounts to $920, representing 1% of my overall capital, while my anticipated profit stands at 7%. So you see a 1% loss translates to a 7% profit overall. The agreement is 1 to 7. Also, according to the trading idea, everything is perfect, everything is beautiful. You just need to be patient and wait, because daily charts typically take about 2 to 3 months to fully play out and reveal their true potential. So please don't assume that tomorrow Ripple will suddenly surge with a large price spike, allowing you to profit significantly. It will move smoothly and deliberately to trick short-term traders with such unpredictable movements, patterns like triangles and flags that often signal potential shifts. All the figures will begin to form here, and there will be a gradual and smooth upward movement during wave 5. Although if you take a closer look at the third wave, I personally find it quite fascinating to observe such significant movement and changes occurring within it. Here we are kind of going, then sharply up, and without much correction we gained the third wave. This probably happened in about a month. Perhaps the fifth wave will begin to expand so rapidly that we can accomplish all 5 phases in just a single month. Impulse waves consistently move with strong momentum, growing rapidly and significantly in intensity over a short period. That's why I consistently recommend trading them during my training sessions for better results. These are the impulse waves. Correction. If you examine corrective waves closely, you likely won't generate any profits in this market situation. What is this? No apparent trend exists here. Correction. A price level that didn't permit a drop below the recent bounce, leading us into the next upward impulse. So it's roughly this scenario. In this situation, the second wave acted as a market correction. You won't make significant earnings unless you took a short position. However, predicting the precise end of an impulse can be a particularly challenging and complex task. Let's move on. Next financial instrument to explore, MetaStocks. Congratulations to everyone on the profit with MetaStocks, guys. Here we are currently holding various sales events for our customers. The market is clearly forming a consistent upward trend with distinct 1, 2, 3, 4, 5 waves. After that point, there is a correction observed. ABCC dips below wave A, and essentially we proceed with our analysis as planned. I believe there will be another drop to the 618 area. But what was interesting about our trade here is that we were working on wave C. This is an impulse wave. Wave A is an impulse, wave B is a correction, wave C is an impulse. The stop was placed here, our take profit is set here. But with 1 to 3, you could have already earned a profit of 2,000. Regarding Meta, we continue to maintain and hold this position firmly. Colleagues, please share in the chat the amounts you earned on Bitcoin, Ripple, and Meta during your trading experiences. At present, our three most robust investment positions are in Bitcoin, Ripple, which is consistently providing us with good profits, and Meta, which continues to perform well in the market. I shared all this exciting information on my Instagram, encouraging everyone to join in and try to earn some rewards. Please share your thoughts in the chat so we can discover how much our colleagues who are currently trading have earned. You can easily communicate through platforms like Telegram and Instagram, and we will all witness that substantial profits can be achieved in the financial market if you engage in trading based on thorough wave analysis techniques. This method offers valuable insights for making informed decisions. Ripple has skyrocketed by over 900%, and Alexander gained an incredible 900% too. Just imagine that return from a single position. I completely agree, that was indeed a favorable trade with a quick stop. If you entered it at that level, you could potentially realize an impressive 900% return, guys, an astonishing 900%. That's truly an impressive achievement, an exceptionally excellent result. I'm curious to know what specific risk this position involved. Was the risk level assessed at 1% or perhaps 2%? I believe the market is responding to these changes, and then we see a correction caused by the large short seller stops. So, 10% on Meta. Guys, 10% on Meta is not bad. Did anyone successfully earn a 10% return on Meta? Is the wave analysis the only method you're using for your complete analysis? Yes, it's indeed the only one available, Andre. The unique and irreplaceable trading strategy I rely on is the wave analysis method that I use. I don't utilize any other trading strategies, but this is not for the deposit. It's specifically regarding the margin used in the trade. I completely understand, Alexander. It's likely that you are looking for it on both Bybit and Binance exchanges for your trading needs. They constantly show high percentages, and it seems like a lot has been earned there. We currently position Meta at $200 with an additional potential range of $200 plus or minus $230, which translates to a risk ratio of 1 to 9 while maintaining a stop loss at $90. I got it all. 1 to 9 is not bad. That's an excellent result. The more of these types of trades you engage in, the fewer you need to complete. Only around 20 to 30% of trades are necessary to earn profits. The higher your profit margins and the lower your stop loss levels, the fewer profitable trades you'll need to achieve your financial goals in a month. You mentioned that you typically manage a 1% risk for each trade, yet your stop loss is set at $500 for crypto, which actually represents 0.5% risk, occasionally fluctuating between 0.5 and 1%. That's an aggressive trade executed under a highly aggressive strategy designed for high-risk situations. So 01 Bitcoin is $700. Andre decided to invest $700 into Bitcoin, which is pretty cool. Guys, you might also think about taking a position with that amount. Not bad. However, I noticed that many individuals are actively trading cryptocurrencies, and based on your feedback, I see that we achieved a reasonable profit overall. Let's move on. The next instrument we have to examine is oil, so let's take a closer look. In terms of the current oil market, we are in the process of establishing a daily time frame analysis here. We sold oil. For those who remember, here we have one impulse and two corrections. Next, one subwave, two subwaves, a sideways trend is forming. A sideways trend usually forms during corrective waves. Then we have a breakout of this range, and probably a retest is happening now, and the downward movement may continue within the third wave. For those of you in my exclusive private channel, we successfully sold oil today. Here is the detailed sale information. Here is our stop loss point, and here is the projected take profit level. Additionally, promptly evaluate the potential risks associated with the trade and my anticipated profit from the oil market. Once more, a brief pause and a substantial profit. This is precisely what we should aim for in the market. So here we have $1,700 in profit. The risk on the trade was $760, and the profit was $4,200, a 1-to-6 trade. We already experienced 1 to 3 price fluctuations this morning. It might have even been addressed, so I anticipate the third wave of decline for oil prices. Next, on the 4-hour time frame, we are forming the first impulse wave, then an ABC zigzag complex correction, the second wave, and then the completion of the second wave. We sold here and set the stop here, holding the sales all week. The market has been falling all week and has already dropped quite significantly. The main advantage of swing trading is that you can open a single position and hold on to it for the entire week, allowing you to potentially accumulate significant profit by the end of the month. Next, I'm waiting for a drop to around 16.18. For the oil market, this upward impulse may begin with a significant correction in the near future. We may need to wait here for a little while, so congratulations to everyone involved. It looks like there is indeed profit. We also maintain a profitable position in this market here. Let's proceed to discuss gold, the most interesting instrument. Everyone trades gold. Yesterday, there was a notable and significant drop in gold prices. How many points did we drop? Let's take a closer look. Yesterday, we fell from approximately 38.90 to 38.20, which is nearly 600 points lost in just one day. So what does the 4-hour time frame show us? There exists a clear formation consisting of 1, 2, 3, 4, and 5 waves, indicating a complete 5-wave movement. However, theoretically speaking, the maximum potential growth ceiling for gold has already been reached. So gold is expected to demonstrate some weakening, suggesting at least a minor correction downwards, which presents an opportunity to sell it. Yesterday, I attempted to sell some gold jewelry I no longer needed. I placed a stop-loss order here, and I established a take profit here. Yesterday, there was a breakout of the trend line, and it was consolidated. Here I am waiting for the continuation of the decline in gold. We've also established a new level. Here is the first peak observed, followed by the second peak, both indicating a noticeable weakening trend in the data. When distinct levels form in a price chart, it indicates a potential weakening trend in the market's movement. If, for instance, this significant peak were to be firmly established above the previous peak, similar to the situation illustrated here, where there is a clear peak followed by a breakout, that would indicate a prevailing upward trend. A breakout of the peak indicates a trend. Here we have a noticeable peak, but there is no significant breakout, which indicates a weakening trend in the market. These are the first signs that gold is weakening and a correction may occur. That's precisely why, at this moment, towards the end of the week, I'm focused solely on selling gold. In principle, I haven't engaged in any trading of gold throughout this entire week. However, just yesterday on Thursday, I made an attempt to sell, and there was a noticeable drop in price. A breakout occurred, resulting in a new level forming, which is quite promising because it suggests that the current trend may be nearing its end. When significant strong trending movements occur, the peaks are typically broken, causing the price to shoot up rapidly. For beginners, this comprehensive setup will serve as an excellent tool to understand clearly when a trend is weakening, when a strong trend is taking place, and how various levels can indicate the first signs of a potential trend reversal in the market. Therefore, I would like to see the price of gold experience a significant drop in the near future, ideally occurring within an ABC correction. Additionally, ensure that you effectively manage the associated risks here, as we are entering gold positions against the prevailing trend. The risk on my trade here is 1%, $1,000, so I will keep 1%, and my profit is 1,000, making the trade 1 to 10. If I successfully catch this correction, I earn a reward of 1 to 10. As you may recall, last week we attempted to short gold, but unfortunately we hit a stop loss at this level. That was 1%. I think there was another trade that also hit a stop, so that was 2%. Essentially, I've experienced a minus 2% decrease in the value of my gold investments over the last 2 weeks. But the true essence of trading lies in the understanding that when you reach your stop-loss limits on gold, it's crucial to remain focused and continue your trading activities. This is because if, for instance, a market correction begins at this moment, I stand to gain 10%, which would effectively offset the losses from the previous 2 trades. In this scenario, I would net a 1% loss overall, ultimately resulting in a total gain of plus 8%. That's why many traders fail to grasp this concept. They often hit their stop-loss orders, or many I've noticed don't set stop-losses at all, and consequently end up losing their entire deposits. Control your risk, control your stops, don't let your stops grow. then believe me, as time passes, there will undoubtedly be some intriguing setups emerging, and you will be able to take your 5 to 8% on the waves and recover those losses you experienced before. Therefore, losses are an inevitable part of trading, and you must learn to accept them as a normal aspect of the process. That's precisely the reason why I'm patiently waiting for a market decline. If I experience another knockout, that would result in 3 losses for me, equating to a 3% loss overall. However, regardless of the timing, the market will inevitably correct itself after the 5th wave. Whether this occurs in a week, 2 weeks, or sometime later, it's bound to happen sooner or later. You will take your 5 to 10% share, which will effectively cover the losses, and you should still ultimately end up in profit. It's crucial to continue performing your job responsibilities effectively, even in the face of setbacks and losses. This guideline specifically applies to those traders who neglect to set stop-loss orders and fail to adequately manage their risks. They will undoubtedly end up with absolutely nothing at all. They will continue to give their hard-earned money to brokers, supporting them as they always have, while still not believing in the insights of wave analysis. So let's move on, colleagues. The next tool we will discuss is the currency market. Today we are specifically trading the euro against the dollar. We have maintained a sell position open all week long. Overall, the current situation in the market is quite uncertain. It has been stagnant throughout the entire week. If the market remains stagnant, unfortunately, we won't be able to earn properly. We truly need a trending market to capitalize on potential opportunities and maximize our gains. Now, if the euro breaks out of this established channel boundary, we should seriously consider making a purchase. This will probably indicate a new upward movement within the framework of 1, 2, 3, 4, 5, plus a breakout of the level. However, if the euro successfully manages to bounce off the upper boundary and subsequently declines, it will represent a regular correction wave labeled ABC for us to analyze. We were primarily working here on establishing a sell position, anticipating a standard market correction, but now the market has stalled and is beginning to reveal potential reversal points. On the 4-hour time frame, we have formed this extended sideways movement pattern. As long as the price is in this range, it is called uncertainty, and this sideways movement has been present all week. Traders are sharing with me that they were unable to generate any profits during this week, which has been quite challenging for them. I completely agree with you. I also found that I couldn't earn anything on the euro here because one really needs to understand and thoroughly evaluate the market conditions a bit more deeply. In such a complex structure, the market becomes virtually untradeable and difficult to navigate successfully. There is no money here. You won't earn money here. Money is likely to be made above this specified level, where a trending movement of approximately 100 to 200 points will begin, or it may occur lower down. This will also likely be a downward movement of 100, 200 points. The longer the consolidation period in this specific range lasts, the stronger and more significant the eventual breakout will be. Let's patiently wait for the breakout of this current consolidation phase, and then we can begin earning in a strong trending market. This week, the currencies are showing considerable weakness, and unfortunately, there isn't much potential for profit or earnings in this situation. The next instrument we have is the Canadian dollar. Hey guys, just a quick reminder to keep an eye on the Canadian dollar as it moves on the 4-hour time frame chart. Here I showed the first impulse and the second correction within the triangle. The stop was strategically set here, and the price is gradually rising steadily. I believe that everyone who tuned in to watch the broadcast could also participate in purchasing the Canadian dollar as well. So far the profit is 1, and the target is $1.41, which will be the third wave up towards 16.18. That's precisely why I'm firmly holding on to these buys here. Colleagues, I remind you that we have a closed channel where I send analytics every day. You are welcome to join my channels and receive daily trading recommendations for 15 different trading instruments from me personally. Currency market and cryptocurrency exist. If you're interested, you can message me directly or on Telegram. Additionally, for those who are just starting out, I can send a free book on wave analysis. Just message me directly here or on Telegram for details. Let's go.